Stablecoins are already better money. They're cheaper, faster, global. But right now, when you want to go from one stablecoin to another, you always have to trade it. And trading is not typically part of a payment flow. You don't sell Wells Fargo dollars to buy Bank of America dollars. You just transfer them. And so the concept of the Better Money Company is we give that kind of fixed fee payment guarantee to stablecoins through our clearinghouse product.
Hi, I'm Pelle from Notabene, joined today by Sam from Better Money. Welcome, Sam.
How you doing, man? I'm glad to see you on a podcast. We usually hang out in real life.
Yeah, we run into each other everywhere. Even from the early days of crypto, it seemed like you'd know everyone from all the conferences and you'd see each other. But
I think crypto got bigger, but then we both got into stablecoins, and that's like a community within a community. Even though stablecoins too are growing really quickly, so
yeah,
it's always fun.
Absolutely. So I'd love to dive into what you guys are doing at Better Money and the very specifics, also how we're going to be working together on this. But first of all, a little bit more about your background. First time I met you, you were not in the role of Better Money.
No, that is true. Yeah, I remember that meeting pretty clearly. Like, we were sitting in a little conference room at Andreessen Horowitz, which is where I worked. I was an investor there for almost 3 years. And you were talking about Notabene, which was this sort of solution that totally did not exist for solving the travel world, and obviously now also more in the payment flow. I started my career as an engineer. I was building distributed systems at Microsoft. I mostly worked on this sort of niche sounding thing called a CRDT, a conflict-free replicated data type used for consensus algorithms. I grew a team at Microsoft around that, and we replatformed the Office suite to it for the collaborative in browser tech. And after 5 years, I feel like we had grown enough. I was on for the next thing. I went to MIT thinking I'd start a company around that research, but I just wasn't inspired by the vertical SaaS that technology was most commonly used for. So I ended up working at the Boston Fed on their stablecoin initiative. And A16Z reached out and said, "Hey, do you want to join us as an investor?" So I was sort of like a reluctant investor at A16Z. I loved it because I got to meet people like you. But the whole time I was there, I knew I wanted to get back to building a company. At the time, this was really my main focus at A16Z was stablecoins, payments, and the gap between where crypto was and what financial institutions needed crypto to be in order to have real scaled adoption. And so that led me to start the Better Money Company, which we can get into now, and I'm sure we'll get into more later. But the concept of the Better Money Company is payment companies, banks, fintechs need payment style guarantees if they're going to use stablecoins. Stablecoins are already better money. They're cheaper, faster, global. But right now, when you want to go from one stablecoin to another, you always have to trade it. And trading is not typically part of a payment flow. You don't sell Wells Fargo dollars to buy Bank of America dollars. You just transfer them. And so we give that kind of fixed fee payment guarantee to stablecoins through our clearinghouse product. So that's like me. I'm based in New York, and the company, we built a clearinghouse in the journey, engineer, investor, founder.
Yeah, that's great. I can imagine it is interesting to be there for a while, but I mean, I'm a build-up by heart. And by the way, CRDTs are pretty cool, I have to say.
Oh, I'm glad. Yeah, do you guys use them in Flow or Tap?
Not directly, but in previous kind of iterations, I have been of things like prior. Like when we were at Uport, we were using some CRDTs for a few different use cases in there.
Yeah. They're pretty widely used in crypto because you get eventual consistency without needing a total ordering. And so for any state transfer where you don't need to know what the head state is, which is what blockchains give you, the head state, you can move things really fast and really cheaply. It's pretty cool.
I mean, I should actually say TAP, our transaction authorization protocol, is basically, if you think about it, basically a CRDT. It's a way for multiple parties to be able to send messages between each other, ultimately reason around getting a transaction onto a blockchain.
I guess most gossip protocols are an eventually consistent set of state updates. Yeah.
Well, I mean, we're particularly excited by what you guys are doing at Better Money because with Notabene Flow, we're trying to solve the problems that finance people have, like the finance people in companies. And my finance guy, my VP of finance is Alex, and he's been one of the great people along on the journey for us building Notabene Flow to make sure it solves that particular use case. So when I heard what you were doing, I was like, aha, Alex will love this because
We get a decent amount of that, by the way. Like we'll be talking to someone maybe who's crypto native, and they kind of squint and say, I'm not sure I get why I need that. Can't I just go to, Uniswap? Great product. Can't I just go to OTC desk? Great service. And then you talk to the accounting guy and they're like, wait, so you're saying I can finally bill someone, $789.87? Thank you. That is exactly what I needed. And you've got a compliant source of funds. And so the Flow product for invoicing fits in pretty precisely with our capabilities. One thing people don't always realize is that in some jurisdictions, you have a legal requirement to bill the exact amount, but in all jurisdictions everywhere, you have a practical obligation from like a reconciliation and accounting perspective to bill not almost the right amount, but exactly the right amount. And so that's something that our clearinghouse enables, where you can accept like the payer can send on any chain with any stablecoin, and the payee, the person receiving the stable coins, will receive exactly the amount they expect in any stable on any chain. And we can mark that up and annotate it so it fits well with Flow. And we know there's always a compliant source of funds, which matters a lot to our regulated customers. And this is just a capability that's very hard to get through intense-based systems or other market and trading-based systems, because you're not actually clearing at par. You're taking a market position, which can lead to a little bit of slippage and therefore some price drift. Anyway, I'm glad Alex likes it. That's exactly kind of our target audience.
Yeah, absolutely. So I mean, the way that the way that we're using it is Flow allows you to specify the supported tokens and blockchains that you need. And while we are very much a stablecoin native company, we live in the stablecoin space, finance has these particular needs, right? Different requirements. So he has to kind of limit what on his side for reconciliation and other purposes, what he takes on that front. So the way that we've been looking at it is we'll just plug in better money for all of those other stable coins.
I wasn't sure if we'd get into it, but I'm glad that we're going to unveil that ultimately we'll have a collaboration here. You can sort of walk through it in more specificity, but we'll integrate the Better Money Company's clearinghouse into the Flow protocol to make sure that if you invoice someone, you can set the stable coins you'll receive, and the sender can send whatever they'd like. And that way Alex gets to settle into his preferred, your CFO gets to settle into his preferred stable coin. It's a scenario we see a lot of customers, but I am grateful, by the way, that you guys are going to be one of, integrated directly into Flow. I think it's going to be a really powerful experience for a lot of your customers, and who ultimately will be customers that we share. That'll be great.
Yeah, I think it's a great way for us to, share visibility, first of all, around Notabene Flow, around Better Money, amongst our entire customer base who will now really be exposed to this. And we've had a lot of companies wanting to pay us with stable coins, but until we could really solve these issues, unfortunately, we haven't really been able to do so at scale. We hope that can change now.
Yeah, this has been really interesting for us because, as we onboard people, you start to hear these customer preferences. You always try to listen to what really matters to the customer. One confusing piece of signal is, what is the actual demand for non-USDC, non-USDT stablecoins? And I think that it's easy to say there's not that much demand. Because it is true, 90+% of stablecoin volume, even today, is in those core two. But once you get into the weeds a little and people realize, oh, you're saying I can trivially switch to my own stablecoin and it doesn't impact my interoperability with the rest of the ecosystem, people's imagination gets a little bit unlocked. And so we're seeing more and more sort of neobank and payment company providers say, well, it's a lot better for me if I own my own stable. I get the yield, but I also get to run my own compliance program. I get to choose how my reserves are managed. And if there's ever a security incident, it's my responsibility, but it's also in my control how I resolve that. And so you don't necessarily want to accept 10,000 different stable coins, but we are seeing this drumbeat of people saying, oh, with the clearinghouse, I can really add many more to the mix, including deposit tokens and other tokenized money, which the banks are particularly excited about. So yeah, let's unlock all this. That'll be great for everyone.
Yeah, absolutely. I'm super excited by these use cases. And I think also I mean, there's been this story in the stablecoin world. You can only have these top, the two famous stablecoins. It'll never change because that's where the liquidity is. But I think that's a narrative that's kind of a holdover from the crypto trading ecosystem because, yeah, there you need a couple of pairs, right?
Yeah.
But when we're talking payments, and as long as there's the right tooling to be able to do this fast and quickly, I think there's absolutely no reason, right?
100%. There's one example that we were talking to a payments company recently, and they were considering using a trading-based solution for stablecoin liquidity so they can move out of one into another. We ended up talking about a stablecoin that they were attempting to grow that they thought they could get to $1 billion in total issuance. So it's $1 billion stablecoin. But they had payments needs that were like $50 to $100 million a day. That's not even remotely possible using trading-based liquidity. Imagine a stablecoin where you were going to move 10% of the volume on secondary markets. This had to happen on a variety of like DEXs and OTC desks, so the liquidity was like further fragmented. You just would never, it would be so prohibitively expensive to maintain a peg in that scenario. But there's definitely small settlement banks that are moving. Now I'm not talking about Stablecoin, I'm talking about like traditional banking. They move a very large amount of their AUM every day because they can just transfer it. They just have like wire-based relationships with other banks. And so once you start to really think about like how scalable a stable coin with secondary liquidity is, in order it just the math begins to very obviously break down in a way that it doesn't if you switch to clearing and transfer based processes.
That's a really good point. That's actually maybe a good area for us to maybe dig into a little bit. Like, how does the clearinghouse work versus like going to a DEX or an OTC? I mean, you hinted at it a little bit here, but it's probably worth getting into.
Yeah. So basically, the way a DEX or an OTC desk works is that you have market participants taking market positions on the assets in their exchange, in this sort of trading based venue that they do, the DEX or the OTC desk. That is to say, if USDC becomes valued at $1.01, they'll sell into that market. And if it becomes valued at 99 cents, they will buy from that market and then they'll sell it somewhere else. There's a constant arbitrage that keeps the price of the biggest stablecoins stable. But if you try to sell many stablecoins in one of these venues, you'll exhaust the capital that these arbitrageurs can deploy into the market. And so the price will dip below $1. It'll go 99, 98. Doesn't typically get to 98 for the biggest stablecoins because people are aware that they can't actually sell that many stablecoins into one market. This is sort of why Warren Buffett takes 2 months to sell his Apple position, because if he unloaded it all at once, he would completely depress the price of the Apple stock. What we do is something that's much more similar to how is to actually how banking works, which is that we go to the issuers and ask them directly. We have primary relationships with all of the largest issuance platforms of Genius Act compliant stablecoins. And we ask them to exchange for a reserve asset. So a tokenized money market fund, potentially another stablecoin, potentially potentially fiat, and so forth, and then transfer these reserve assets to the next issuer. So that way they never have to go into cash, and you don't have to have a trading-based relationship with the stablecoin. You get to treat it as the par asset that it is by the sort of definition of the Genius Act regulation, where all stablecoins have to be backed one-to-one by these reserves. And so it's in this process that you remove the market-based forces and go directly to primary liquidity, which is much safer and has much lower sort of volatility concerns, allowing you to scale even relatively small issuance stablecoins to larger payment scale volumes.
This actually calls out something that I see a lot, is that so many intricacies behind moving money, right?
Yeah.
And most people have no clue how money moves kind of outside of stablecoins. Stablecoins is a little bit simpler, but due to it's not all on the same blockchain, there are different issuers, maybe there's a fiat leg, something like that. We start getting into this complexity as well. And for some reason, because we are all building kind of in open, a lot of this noise gets in and dominates also a lot of the conversation, where I think one of the things that both of us are trying to do is kind of, this is back end
Yeah.
stuff that people don't really have to worry about. But I feel my personal rant is there's a little bit too much inside baseball when at conferences and on podcasts and on X around stablecoins that most, like, Alex doesn't care about, for example, right?
Oh, it's so true. Everything is complicated.
Yeah.
This is a personal perspective as an engineer. Like, someone asks you how something works, and it's like, how deep do you want to go? Like, how does plumbing work? Like, yeah, you just turn the sink on, but there's 200 years of infrastructure under these streets that make it all happen. And the simple thing is you get to flip the tap. And for stablecoins, what you want is people to get exactly the amount of money they expected for a predictable cost. And when we're chatting like this, we'll riff for an hour about the differences between market settled versus cleared assets. But but ultimately the goal is you pay with whatever, and the person receives whatever, and you can just treat them like dollars, which is what we want to see at the end of the day.
Yeah, exactly. Complexity will always be there, but
Yeah.
it should not be the main value prop should not be the complexity. It should be what we solve with this.
Completely agree. Yeah. plus one to that.
So what about, say, open versus closed networks? I guess a lot of people that are looking, now as stablecoins are being used for payments, that are maybe trying to build more closed networks.
Well, what's an example of a closed network? Because I have a suspicion of where you're going, but I don't want to put the words in your mouth.
I don't necessarily want to necessarily name someone specifically, but
okay.
in the push payment approach, there are closed networks. There's also, frankly, there's closed networks and pull payments as well, like Visa, MasterCard. I think it's great to mention them. They often see themselves as open loop because of just the sheer size.
Yeah, they say they're open loop for sure.
Yeah, but in reality, it's not like I can just go in and there's a sign up form, and I can go in and become a issuer. Now, there are companies that are doing a great job of making that easier to get onto them, but it's not like a free for all to be able to sign up for them.
Yeah,
and that's where payments traditionally were very much closed loop or open loops operated, like, let's say, ACH.
Yeah, closed loops just to some extent it's easier because you're coordinating with yourself. Like a classic closed loop network is Venmo. You can run Venmo off of like a database it's basically a database and a bank account, and it tracks how much money everyone has, and that's most of the product. If you do an open loop thing, which I think Visa is fairly open loop. They've got this VSS 110 settlement report they've got to send to every member issuer, member requirer. They've got to pick how the different constituents actually move money between each other. It gets to be pretty complicated. It's interesting in the blockchain world, we're sort of seeing three different types of at the broadest level, just looking at open loop, closed loop, three different types of networks emerge. We've got the sort of classic open Ethereum, Solana networks that Base, Polygon, and so forth, that people think about. Anyone can access them. They're really built for the community, maybe by the community. And then we're starting to get more vertical specific networks like an Arc and a Tempo that are pretty opinionated, but still open. And then we've also got closed networks. I don't have a strong perspective on which is best in some moral ethical judgment, but I do think ultimately if you get escape velocity, open networks are way easier to build on, so you're likely to have a more vibrant ecosystem. There's a reason why Venmo is sort of stuck in the US, but Visa is international and global. So over time, I think we'll see a drift towards open.
I agree with you. Actually, Connexus they're doing a great job, and processing a huge amount of transactions. But even they, I think, from what I can see, they're looking to how can we expand out. They're hitting kind of that wall of a closed loop network.
And by the way, Venmo has a credit card. So it's like, they too have to tap into the economics of the open loop network. I think the reason why they have a credit card is probably because they make money on it. In it, not just the ability to tap into the open loop network, but yeah, people need more ways to get off of these closed loop networks because they're harder to integrate with.
My whole theory is that we're going to see something similar to what happened with the internet, where you had, communication in the old days was, of course, there's a large, giant monopoly telecoms who were all interconnected through global standards and global associations. And they made everything safe and made sure calls went through, and also that calls were expensive. And you couldn't do that much on it. And then we had closed loop online services like AOL and CompuServe that came after. And all of a sudden it was interesting. You could do a lot more because it was closed loop. You didn't have to get all the committees to okay everything.
Yeah.
But the internet, which was truly open loop, truly multi-application, really ended up, being a much stronger communication medium than any of those over time. But to do it, you just needed different kinds of tools. You needed different ways of doing business around it, which is also somewhat where we're big proponents of open loop at Notabene, where we help companies manage their own risk appetite on these open loop networks.
My sense is that what you guys are doing at Notabene is, it's the kind of infrastructure that makes open systems legible to someone who wants to participate but doesn't understand the whole thing. The same way my browser sort of keeps me safe and I get to go to any website, but I get to set my security preferences, and I've got some like home pages sort of tabbed to the top, the bookmarks and stuff.
Mm-hmm.
I get the sense that Flow could do that in the payments world, where you set the assets you're willing to receive, you identify some network participants that you know and trust and want to participate with, and then if you want to add someone, Flow will guide you through that process. So that's typically what happens: is you end up with a technology provider and network sort of on top of the open loop system that makes the whole thing legible to someone who doesn't want to look at HTTP requests and understand HTML and all that stuff.
And I think it's also very important when you build these kind of things that you do it in a way that relates to the way people do business today or interact today. Like M-Pesa, and really the key driver for M-Pesa was that it came with the built-in identity layer that everyone were already using, their address book, like in their phone, right? Or phone book. And that's how they were able to really build this trusted ecosystem of people sending money between each other and requesting money, etc. And you need ways of doing that and not rebuild all of that from scratch, right? Where we struggled a little bit in crypto, Web3, around this.
Can I ask you a question?
Yeah.
I have this pet theory that every big platform shift requires the users to learn one or two new things. You can't teach them 5 or 10 or 15, but everyone who uses a computer now understands what a password is. They kind of know how to program with the URL. Like that's like a little bit of code right there. It's a universal resource locator, and they understand the concept of a username. They know what a backspace is. To go back a page. If you had to guess, like, what is the one or two key concepts that people in stablecoin payments, or maybe in crypto, need people to understand that unlock the rest of the value? And like, how are we going to frame those key concepts so that they're not too intimidating and they're worth learning?
That's a great question. I like the idea of just there's a couple that you need, and it's very clear you always need some level of behavior change, right? But it can't be too much. I like the way you framed that. I may steal that.
Yeah, you can throw like trademark Sam Broner at the end, or trademark Better Money. But yeah, no, you got it. Keep it.
But we've seen with blockchains, with the trading use cases, for example, people kind of figured out, and also lost a lot of money, how to transact with blockchain addresses somewhat. I don't think anyone actually really enjoys them, except for the purist. I do like to say that as an industry, we do have a bit of a Stockholm syndrome around that. And like with Notabene, we've always been trying to like move the blockchain address down below so people can just use some identifier that they already know to be able to initiate a transaction. But there's always been pushback. No, our withdrawal UX is perfect. It's great. So this was very early that we would hear that. Now we're actually having our customers saying, can you help improve this part of it now? But it is a very important aspect. If you really look at where we are with public blockchains and then tie it back to the last really, really, really large platform shift, which is the internet, is we are at pre-domain name.
Yep.
We are pre-SSL. Yet people somehow have still figured out for the specific use cases where they have a burning need, such as generate wealth quickly overnight, trading. I mean, I'm not saying that generate
No,
wealth
but there's other
overnight
ones that
is,
are
yeah,
a little more forgiving. Those are fine use cases, but
yeah,
I
yeah,
mean, remittances, holding dollars in a place where currency is volatile or
yeah,
you don't trust the banking system. These are extremely important.
yeah. Those are very important, but those use cases are very often very often happen on a centralized exchange. So, like,
Mm,
my understanding is that one of the largest wallets, it's not like it's not self-hosted wallets that are the largest holders of Tether in the developing world. It's like the large CeFi exchanges like Binance, etc., that people use for this.
yeah, I actually, for what it's worth, like when I was at ACCZ, I met with, I don't know, 300 stablecoin companies, 400 stablecoin companies. For a little while, I was keeping track of just the growth number I was hearing for the stablecoin companies I talked to, and very, very common to hear, 10 to 40% growth month over month from everything from centralized solution to payment solution to self custody solution. And so I think those numbers will even out a little bit, but yeah, totally fair. Right now we're talking about what we have to upgrade, and stablecoins sort of got off track with the debate on where the growth is. But yeah, we definitely are pre-domain name, and we're definitely
Yeah.
pre-SSL. I wonder if the concept of a assigned transaction, just like a very digital native way of saying I am who I am and I approve this message, if that is a concept that will have to come with us to the next phase because it's a primitive that doesn't exist yet. But if you have finality the way that blockchains require, in a way that is sort of going away if with a lot of the rest of the internet, it might be something that people really want. A sort of a solemn, serious signing moment is seems like an important thing for payments that are permanent, instant, global. Even though we do actually introduce some reversibility, like there's a certain point when it becomes final. So that's one idea that's been coming to mind
Hmm.
for us.
Yeah, I mean, I think there's real importance in driving some level of identity into these transactions. I think a lot of the early approaches. I mean, I was involved with Uport. Me and my founding team, Alice and
Yeah.
me, we built Uport at Consensus beforehand, where we had a very very privacy first version. The way that we were looking at it, so we were driving towards using self sovereign identity with verifiable credentials, where the Ethereum community as a whole kind of took a slightly different approach with ENS, soul-bound tokens, NFTs, and on-chain aspects of it that I personally think are a step back and probably not really what most people think they are. I mean, people who understand how blockchains work, they understand what they are. But I mean, these are, in some respects, me saying who I am and everything I hold, everything I do on the blockchain. And I think most people who have ENS names, they don't quite understand that they are basically doxing themselves. So anything that we do, I think there are ways that we can do it in a way where some things we do want to present publicly, right? And then most things we may not.
And I think we're both trying to make it a little bit better. Certainly, Flow and Tap are doing lots to make the identity compliance system a lot simpler to reason about.
One area that I've been talking a lot with people on in the last couple of weeks is around fiat and stablecoins. And one question that came up to me after talking with a couple of unnamed banks around stablecoins, and it was very interesting because they just see stablecoins as fiat. Are we complicating things too much? That, like, we talk about fiat on ramps. This is the thesis that I'm exploring at the moment. Also, is it fiat on-ramp? Is that the real terminology now we're dealing with stablecoins, or is that just a holdover from back when people were buying Ethereum to buy it?
That's a good question. Okay, I think that it is too forward-looking for you to say that fiat on and off ramping is not relevant to stablecoins, because ultimately connecting stablecoins to traditional payments and banking and fiat stuff is still a little bit too complicated. And so I think this will go away at some point where every bank will know how to maybe shift their traditional deposits into a deposit token and then swap it for a stablecoin. And that'll be exactly the same conversion that banks do when they access the correspondent banking network, or when they use IntraFi to do sweep deposits, or when they allow a user to have a card. These get simplified the same way when you turn on the faucet, the water comes out. Like eventually, we're not gonna talk about the 30 joints that are in the middle and the different pressure valves and stuff. But today it's still an important thing. People still have to think about the hookup that connects the fiat world, the stablecoin world.
I 100% agree with you on that.
Oh, okay,
I
good,
agree with
good.
you on that. It's just, the thing is more the naming of it. Is it on, off ramp? Like, it's truly, you definitely need a connection to a PIX, right? Or
Yeah.
to SEPA or ACH. You need that. But is the correct term for that fiat on off ramp? Because isn't stablecoin just fiat when it comes down to it?
Yeah, I think that's fair. I mean, it's like it's trending towards being another accepted way to do payment, and certainly a Genius Act or regulated stablecoin is one-to-one backed by treasuries. In many ways, a firmer guarantee on value than what other more widely accepted payment rails are. What would the perfect word be, right? It would be like some sort of connection. Just it's the PIX to stablecoin connection, or it's a deposit token to stablecoin clearing venue.
Maybe gateway, because that's how people talk about it in more traditional payments, right? So maybe a gateway is kind of, I don't know, but sometimes I think stablecoins are basically fiat. I mean, they're backed by dollar denominated or euro or whatever denominated distribution. They are basically fiat. And I feel sometimes we're just overcomplicating ourselves by putting it in the bucket of crypto.
One thing I like, by the way, just that I feel never talked about, is that you on ramp onto crypto. You're elevated. You're elusive. You're faster. Maybe you're on a highway now, and then you off ramp back into
that.
fiat.
Yeah.
Oh, I feel like we never really took that win, but it's kind of a fun detail just in terms of the metaphor.
I think we're coming up towards the end now. What are you building now? I know you guys just launched. What's coming that you can talk about?
Well, we're onboarding people now. We've started to move people's money. We've done integrations with 8 of the top 10 stablecoin issuance platforms. So you can use basically any Genius Act compliant custom stablecoin, USDC, RLUSD, USDG, bridge issued stables, and have them all be one-to-one droppable. If you are launching a custom stable, need to work with custom stables, you just need firm guarantees and a well-built admin dashboard for reconciliation. Would love to meet you. What's next on the horizon is that we're really growing the team, and because of the fact that we started with this core product and there's much more to build, we're now seeing from our customers that there's more ways that we can extend the clearinghouse more deeply into their reconciliation and administrative needs, and so we'll do that. But besides that, we're hanging out in New York. We've got a couple of free desks in the office, so if anyone's ever in town, they should reach out and come over.
We're very excited to be collaborating very closely with Better Money. We'll be launching and bringing Better Money's stablecoin clearing facilities directly into Notabene Flow, which means if you are requesting a transaction in RLUSD, your customer can pay those funds using USDC or USDG.
Yeah, that's right. This is a pretty exciting one. So thank you we've known each other for a long time. I appreciate getting to be so deeply integrated into Flow with the Better Money company. Any stablecoin on any chain can be settled into the recipient, the invoice sender in the Flow language, into their preferred stablecoin on their preferred chain. And so we'll be sitting in a Flow transaction where an invoice will indicate the recipient's preferred stablecoin, and we'll make sure that the sender can send any stablecoin into that. And I'm excited to get going with this integration. We'll have more to share soon about how people who are deep in stables, deep in crypto, or just want to pay more simply can use the combination of Notabene Flow and the Better Money Company Clearinghouse to make stablecoin payments easier.